Good morning, everybody. Welcome back to Schwab Coaching. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner, joining you all from a beautiful Denver, Colorado. And today, pleased to be joined by my friend, Schwab's regional investment strategist, Michael Bruskoff. Good morning, Mike. Great to see you, man. Been a little bit. How you been?
Hey, good morning, Kevin. Doing well. Hopefully, I'm doing better than the market lately, but we're going to find out in a little bit. An eventful few weeks since we last spoke.
It has. But you know what? Conveniently, the market price action's been favorable this last week or so. Certainly since you and I last spoke. But what I find notable is that there hasn't been a lot of shift in terms of the actual risks in the marketplace, meaning we've just been moving higher, bouncing off of lows, which we will certainly take. But I'm just wondering if we've actually gotten any good reasons to support such rallies, Mike. I think we should be covering some of that today. What about you?
Well, I think we'll definitely hit a couple of those things. And I think some of it is we become immune to the news, right? We're just going to keep moving forward, whether the news is positive, whether the news is negative. The market keeps chugging along, and maybe we've digested a little bit of this. I'm not going to say that we have or we haven't, but yeah, I think that'll be the fun that you and I are going to talk about in the next half hour or so.
Yeah, we're going to try and provide some context, some color, demystify some of what we're dealing with, but we'll allow the charts to speak for themselves. So before we get into it, everybody say hey to our friend Mike Fairborn there in the chat. He's going to get to questions and comments that Mr. Bruskoff and I are unable to get to. But please feel free posting in there for the duration of the segment. You all know we go about 45 minutes in total. If you're not already doing so, Mike and I would appreciate a quick follow on X. I'm there at Kevin Horner CS, and Mr. Fairborn, excuse me, you can find at Mike Fairborn CS as well. Let's get to our disclosures, everybody. I'll remind you that our conversation is exclusively informational and educational. We do not make recommendations. We do not make endorsements for a particular approach or strategy to trading the market. We do talk technical analysis in this segment. In doing so, we cover some of the concepts, some of the strategies traders choose to employ. But remember, technical analysis is just a piece of the puzzle. We encourage you to make decisions based on a multitude of those pieces, not just one, whether that be technical analysis or any other process you might be considering. Of course, our agenda will be consistent as usual. We're going to hit the major indices here, look for some price levels of import for us all for the week. We'll then try to find some sectors that are moving around, some individual equities in the news. We got a bunch of stocks reporting this week, including 4 of the big Mag 7 stocks we're going to be hearing from this week as well. So lots to get to today, a lot on deck for us this week that could all be big market movers. So let's talk about some levels here, Mike. The S&P 500 had a fantastic finish, dude. If we pull in to what has happened in the last just 5 sessions, man, this has been fantastic. 4 sessions in a row where we've held the 20-day moving average. And Mike, we finished at highs on Friday. What is it about this bounce back that's keeping some bulls a little bit timid?
You're funny. You're asking me what's keeping the bulls timid. What's keeping the bears timid, right? I might look at it the other way, Kevin. Listen, I appreciate what you said. Listen, one thing I will notice: look at the white line you have on your chart, that downward trending line, right, from the highs, back in, at the beginning, in early February, can't even get it out, and then we were able to make even as you're manipulating that a little bit. We did break that downtrend on the S&P 500 last week. So let's take that as a positive note, right? You hadn't seen that downward trend line since early February, us breaking above that. So let me come back to your question. Number one, I like that we did break above there. But what's keeping the bulls out of the market? I still think it's the biggest question out there. It's the uncertainty of tariffs, right? So I don't know that the bulls are out of the market. Maybe 20%, up touching almost 20% down on the market, over the last week or so, maybe has brought some buyers, some bargain shoppers in there to the market, Kevin. But I don't know that we're keeping the bulls out. I don't know that the bulls want to come in. I think that's part of what it is. Kevin, I'm not jumping up and down when I don't know what tomorrow brings. So I think from a money manager perspective, somebody who watches the market intently, I think that overhang is still out there, but I'm going to take every ounce of good news that I can get out of the market right now.
Oh, heck yeah. We will take it. But of course, as technicians, traders are looking for some semblance of confirmation. They want some belief that the reasoning behind the rally has legs, right? And that's where it still remains unclear. What I like about it, nonetheless, is that we've got some price levels against which bulls can base decisions. You can look at the lows we established middle of last week. The 20-day moving average could be an area of importance for short-term bulls as a potential revisit. I mean, if we got thrown back, for example, everybody, to the 20-day and tested and held again, that would be an excellent development, Mike, because, again, confirmation provides a lot of comfort and confidence to the new trend, right?
No doubt. And I think that goes, when I sarcastically said it, are we getting immune to the bad news? Maybe, maybe not. And now, can you give me some, I'll call it statistical, support at the 20-day, making a new short-term high, maybe pushing above a downward trending 50-day moving average. Now, that's going to be a bigger challenge as we get there. Yes. But I do think you're right on target, Kevin. Can we get some things to substantiate, give me something to dig into in the market, say, hey, this is the reason I'm buying. Short-term high over the last, where we closed actually on Thursday afternoon, Friday follow through this morning, 5 minutes into the game. Yeah, those are short-term positive things for me right now on the market.
Yep. And you know what? We will grab our short-term positives when we can, Mike. We will work with them. We'll take them, but recognize that it might not be the beginning of the absolute reversal and move right back to where we once were, everybody. It's likely to be stair steps, of course. So let's just always try to remind ourselves of some standard thoughts on the market. We take stairs up and elevators to the downside, commonly, or escalators, take your pick. But they tend to be slower moves up, faster moves down. One thing to bear in mind. Additionally, as I stated, we don't have a whole lot of different news as it relates. What's gone on in the last 2 weeks has really just been a quieting of the news. A little fewer headlines discussing tariffs. That does not mean we're out of the woods. So remind yourselves of that. We're going to start getting data as a result of these tariffs, the discussion on tariffs over the coming 1 to 2, 3 weeks out. We're going to start hearing about how the shipping containers, how full are those containers? Is everything in the supply chain working the way we hope? This data is going to have a very big importance on us, everybody. So we're going to have to keep our ear to the rail, as I like to say. If we're looking for upside, let's just talk about that. Mike called it out. The 50-day moving average is certainly within play now that we are looking at 4 days above the 20-day moving average. I see Wiley mentioning the so-called Horner rule being a bit in effect. We've got day 4 above a 20-day moving average, so some of you might call that confirmation. A lot of traders like to see some semblance of that, right? 3 consecutive closes, closing at new highs on Friday. That's all a positive for bulls here. Briefly, a look at the weekly. There's just not a lot to say that you're not going to suggest doesn't have more to go here. The trend line is certainly valid. Everything we've said about the level to which we've rallied is seemingly pretty intriguing, Mike, but I'll tell you what, with any optimistic commentary that's comes into the market now, could we see this push even higher? I mean, another couple hundred points, 57.50 on the longer end does appear to be a big zone of potential resistance, Mike. But like I said, it would have to likely come in the form of positive headlines in some way, shape, or form. Do you agree with that?
I would certainly agree with that. And I think, if me and you were to go back, I'll say fast forward 5 years from now, and who knows what the result of all of this is. I have no idea, right? But this is just a pullback from a strong upward move in the market, right? If you look at this chart, look how you drew it as we hit that upward trend line, matching those lows of, here, sorry, you see the time frame on me there. Yeah, as you look at it, those are, working off an overbought condition. even though because it might have been the term of tariffs and the change of presidency, who cares about all those things 5 years from now when we look at a chart? But now if we were able to hold that support line that you've drawn with your green dashed line going from the lower left to the upper right corner, I would think that that's your statistics, right? I don't want to call it statistical proof because it's not there. But at the end of the day, can we hold that support line right now at that, that 4,700, 4,800 line spot? Can we hold that as the lows? And then do we have to make a new high? Do we have to challenge the 50-day moving average? Not necessarily. That would be on the week chart. But at the end of the day, can we? I think that's something we're going to take a look at, and maybe we've already put in these lows, Kevin. Maybe we have.
It's possible. It's always possible, and that's what we're trying to remind ourselves of, Mike. We build out possibilities, maybe rank probabilities, right? That's how we decide how to deploy our funds. We've moved through a certain level. Bulls are more confident, add a little bit more money to the mix because of that confidence, because of that confirmation. Things start to break down. You want to be a bit more defensive. You start to build cash. You pull money from your investments, right? Just a process that we traders need to go through. The question becomes, are you that individual who manages the portfolio like that? Or are you the individual who just steps back and lets the market do what it's going to do? And, you get big swings one way or the other, and you've got your levels where you decide, all right, we're down 20 plus. Now I add money because that's my standardized, very basic approach. Whatever it is, that is your plan. Work to stick to said plan. That's the key to long range investing, at least. Try to be consistent in your process. Mike, there's really not a lot of changes as we talk about the NDX here. We're also looking day 4 above the 20-day moving average. Pushing through highs we closed at on Friday, bullish in nature, and yet we've got that 50-day moving average looming ahead. It's about 200 points above where we are right now on the NDX. Could that be maybe a pause location for any rally here?
Listen, I'm happy with the movement. You can pull up about 100 other charts. SPX and the NASDAQ look where we've broken we've reached a new short-term high, right? Short-term high where we broke through a little bit of resistance. I'm going to take it with those. I was looking at some sectors this morning. We'll see it on maybe 2 or 3 other sectors, but the rest of the market's still a little bit of a down, not in that upward trend right now, right? I don't want to say anything to an upward trend, but go back to your question. Can we push through that 50-day moving average? I think, we'll probably see a little bit of resistance there. Doesn't mean that it's failing. It just means it's probably going to take more than one try to get through that 50-day moving average. That being said, when we run into the 50-day, if we don't break through it, what do we do from there? Do we go and now hit new short-term lows? Probably wouldn't be the best trend out there for the market. Could we move a little sideways? I think probably me, you, and everybody else who follows the market would probably be pretty happy if the market could maybe hit the 50-day and just move sideways. Doesn't mean it's true resistance, just means we've maybe now found a new area for the market to kind of work through. And I think that would probably be a healthier base for us to build for the market.
I like it when you talk health, Mike. I mean, we would love a healthy approach to price action. Outside of the last 2 weeks, that price action's been a little unhealthy, right? We've digested a whole lot of news. Now, again, when we start, it's like the downtime. I go into the doctor, I have to have some blood tests done. I've got negativity leading into the doctor visit. That's all of this downtrend stuff that we saw that made this tested low, right? Well, then we've got the 2-week window while we're waiting for results. There's absolutely nothing on the horizon until I hear the results of my blood panel, for example. Well, that's what we're waiting on, right? We're waiting on said delivery of data and important detail that's going to dictate that next move from a legitimate standpoint. This price action to me just feels like relief action. We will take it because we are moving off of a higher low. No negative there, but we have to understand where we reside in the trend. So if we can push through the 50-day And this is the case, by the way, across the board. So whether this be the SPX, the NDX, etc., if we can move through the 50, well, then we can start talking about the 200-day. That's another potential 500 to 600 points above us. If we get rejected at the 50-day, then we're going to look at the 20-day down beneath us because that was the last low we made. So last low, consistent with the 20-day moving average, gives us a range to monitor for this week. Clearly, some of those big names reporting are going to have an impact on things, and obviously, headline risk remains. So just some more things to bear in mind. Now, Mike, the conversation around the potential for a recession had pushed the Russell and small caps dramatically lower, so we've had some leadership to the downside. But again, the action of the last week has been bullish, relieving some of that strain on the Russell 2000. 4 days now above the 20. But Mike, everything we just said about the SPX, the NDX, all of it looks very much similar to the rut here, doesn't it?
Kevin, I agree with you with, getting above that 20-day moving average. But the one thing that I might slightly disagree with would be we're still, look at your white trend line, right? From that high in December, we're still below that trend. So while I like the S&P 500, I like the NASDAQ, I'll call it the Qs, I like that we were breaking above your downward trending line. The Russell still has some work to do. Will I take that it's above the 20-day moving average? I will. You could see the downward sloping 50-day. It's pretty darn steep. I would hope that we could probably push through that a little bit better, a little bit sooner than maybe on the S&P 500. So while I like the price movement of the Russell, I'm not there that this is a little bit of a recovery. I still think the Russell has a little bit more work to do versus the other two indexes, which makes sense. It makes sense.
I agree. And let's, for those of you who've been watching this show for a very long time, you know that we have covered the importance of the level at 2000 previously. We've talked quite a bit about it, as a matter of fact. If you look at this on the weekly, remember, Mike, way back when 2000 was major resistance for us, and then it became support. Well, guess what? It can be, again, resistance, and that's kind of what we're looking at there. 2000 on this chart, whether it's the weekly or the daily, still presents as resistance. And Mike, look at the speed with which the 50-day is moving to the downside now. If and when we get the rut to challenge the 2000 level, the odds are strong we're going to see the 50-day at that level as well, which tells us more confluence, more traders eyeballing 2000 as potential resistance. Doesn't mean we have to lose steam there, but it does mean that if we do lose steam there, if we see the cease of the rally at that level, that we are more apt to at least roll and pull back to the lows we've made in the last week there, right around that 1900 level. So definitely gives us something to monitor on the Russell. Unfortunately, the conversation locally, I don't know how you all have noted this, but if you're just driving around town and you're looking at the commercial real estate areas in your city and town, I don't know about all of you, but I'm certainly seeing a lot more open businesses these days, Mike. It certainly feels like things, especially in the small cap realm, are weakening or have been for some time. So, it's difficult on this chart. Mike, anything else you would like to say as it relates to small caps here?
No, I mean, we'll hit it in a couple of seconds. So one thing I think is they need a little bit of help from the Fed, and I don't think that we're going to get much Fed help. We'll talk about that in a couple seconds. But yeah, I need a little bit more movement on the Russell for me to start being a little more positive. Lack of a better term.
Mike, talk to me about that. What is it about the Fed's discussion that's keeping you a little timid here? I mean, yields are settling, but not pulling back, right? I mean, this is a pullback to an area of support in the 10-year yield, but we aren't seeing the movement that the administration was hoping to get in terms of rates dropping by virtue of individuals looking to buying up Treasury notes. That's not what's happening right now.
Yeah, I think we're getting the exact opposite. We're getting the exact opposite right now. I think, listen, obviously we don't talk politics. I really feel, I think it's uncertainty. That's all I can say. Uncertainty is not what the Treasury market likes. It's not what the stock market likes. And I think if we can get a little bit more certainty of where we're going. Hey, we've got to deal with XYZ country, whatever it is, right? I think we need a lot of rhetoric coming out of China, coming out of the U.S. I think all of those gyrations are causing a little bit, obviously consternation in the treasury market as well, right? So I think that's things that we're looking at. If I can move forward, right, we've got some key indicators coming out this week, right? We've got some big earnings, but what do we have from the Fed side? We got the PCE coming out, personal consumption expenditures, Kevin. How much are these goods costing me to buy right now? And I think if we look at this as a number and we start to see deflationary, inflationary, which way are we trending? Now, we've been trending that the PCE has been kind of flattening to slightly inflationary, hoping that it would continue to keep coming down year over year. And I think that's when I talk about the Fed right now, I'm going to go with strict Fed numbers. I'm not going to go with politics. I'm going to go with, are they seeing something in the economy that we're slowing down, or it's too hot, right? Prices are moving too. Now, prices aren't moving up the second. Some of these things, some of the actions might lead to inflationary, but we haven't seen that in prices yet. So those are the things that I'm kind of focusing on, what the Fed can do. So I'm not saying the Fed's doing anything, but I am looking at numbers that I know they look at this week. That's for sure.
Yeah, I think you're on the right path there. We have to keep listening to their the commentary. It seems like they choose not to act. Like they don't want to have a heavy hand on this. They will act if necessary, is what they've stated, but they've also feel as though that too much of a Fed input here would be perhaps problematic in the longer run. So I think they're trying to remain relatively neutral to a certain extent, but I know that's not what, like I said, it's not what the administration wants. It certainly would help us to see rates lower, but I also understand that there's a longer run viewpoint necessary here. Mike, one of the other charts that we've kind of periodically been checking on is one that our friend Rachel Deschelle has provided us. I'm pulling this up because I think this is interesting, Mike. We could see that there's been a bit of a shift to where we reside in terms of market breadth overall. Notably, look at those NYSE new yearly lows. We're basically not seeing anything at lows all of a sudden here because we've recently made lows. So that stands out. But we are seeing an improvement in those stocks over the 50 and over the 200-day moving averages. But I bring it up because as nice of an improvement as that is, it is not necessarily validating a reversal, is it?
I don't know that it's validating a reversal, but maybe I could use this as a sentiment indicator, right? The other way. I love this chart, but new yearly lows, when we're reaching all those new yearly lows, is that a time to maybe be a contrarian? Hey, how much worse can it get? And if you look over the last week and a half, it's gotten a little better from that spot where you had the peak of 1,000 new yearly lows on the NYSE, right? So 1 week last week suddenly changes that, right, real quickly. So could I use that as a sentiment indicator, as just one of the many things that I might look at? 100%. I think I could use that. Stocks, S&P greater than trading greater than the 200-day moving average. We're still getting a low number down there. So we still need to see some kind of movement towards there to get me a little bit better sentiment. But I'm going to agree with you. The top two boxes up there, I'm going to kind of take those as positive signs that we're moving off those lows.
Yeah, we'll take it. I don't have any problem with that. I just like to see the reminder maybe of what we're seeing in the broader view of things. It's nice to see it from a visual reflection. I do want to
definitely
bring in the SOX here, Mike, and I'm going to let you speak to this a little bit because, again, it looks very much like everything we've talked about. But I'm going to go ahead and put in that chart to share it with everybody because that's something you all can have. So this is the SPX grid there, the SPX breadth chart, everybody. So you can all take this and add it to your view if you'd like to utilize it. Remember, these grids, these are not anything we share here is not guaranteed for its accuracy, certainly not a recommendation for its use, but if you'd like it, it's there for you in the grid. Mike, SOX. I mean, again, visually, it looks just like everything else we've been talking about, doesn't it?
It does. But again, we're to the positive side of that white downward trending line. So when we look at that, even if we have a little bit of a sell-off in the stocks this week, can we just hold that downward trend line and use it as support, right? So that's kind of the way I'm looking at it. I'm not saying I'm jumping up and down about these. Look at the downward trend that they've had. But if you're looking through, what do they call that? In a hurricane, the bright spot, the sun is finally coming out. Yeah, that, call it green shoots. I believe Alan Greenspan quoted that term green shoots a few years ago, right? So I do like some of the price action. Is it a dead cat bounce? That's the answer that me and you don't know right now. We don't know that answer, but I'm not going to, I'll spin it to the positive side that maybe we're perhaps building a base. And I think if maybe we move sideways a little bit, I'd be a little more optimistic with that. But yeah, on the stocks, as bad as it's been for the last, call it almost 6 weeks, 6.5 weeks, this last week was a positive movement there. So I'm going to take a positive movement for what it is.
Heck yeah, we'll take what we can get when we get it. As I tell my children frequently, we take what we get and we don't throw a fit. Okay, so I've got this high up here, Mike, from this big candle bar on the stocks. Came in at 42.65. Friday's high was 42.79. Didn't close there. The close was 42.51. So we closed below the high. And then today's high is similar in nature to those levels. So kind of meeting some resistance as we speak. If you were looking, everybody, for the potential for a short-term pullback, and again, I'm not going to suggest an outright reversal or even a true continuation of the downtrend we're looking at from that peak in February, but if we were to take out the low from Friday, that would give you a potential close below the low of the high day, and that could give you the opportunity to revisit the 20 and the lows that we just set last week. You can perhaps take that similar view as it relates to the SPX and to the NDX if you were feeling a little bit uncertain about our opportunity for continuation of the rally, or if you were feeling bearish in nature. The first indication of that weakness coming back into the mix is closing below the low of the high day in this rally. And for the NDX, the SPX, the SOX, the high day to this point is either today or last Friday. So that should give you something to monitor short term if you're looking to maybe consider the other direction. So hopefully that helps out everybody. Okay, Mike, two last things that I wanted to get to. Actually, yeah, two. Number one is the risk on scenario as it relates to Bitcoin, because we talk so much about not necessarily Bitcoin from its levels. I'm not worried about that as much as I'm worried about just the comfort that seems to come, Mike, when the market is feeling optimistic. Bitcoin tends to outperform, and we've moved pretty strongly off of some support levels here. So this has the makeup of maybe a risk-on scenario, and yet, this is pretty intriguing. The move we've made just the last week there, holding a very important level of support now. What are your thoughts as it relates to the risk-on conversation overall in the market here, Mike?
Risk on Bitcoin or risk on the market itself?
I think just broadly, because obviously I'm utilizing, I think a lot of traders utilize Bitcoin as a bit of a proxy for the concept of risk on. Do you feel similar?
Listen, I hear what you're saying, right? This can be viewed as a risk-on asset, right? And the truth is it's meant to be when risk is off. That's what people thought it would have it would hold its value when the risk is off and everybody's selling. Mm-hmm. How come this doesn't act like gold, right? Lack of a better term, right? How come this doesn't act like gold? And that's what people are saying. But as we look at risk on, right, market taking on, and now this is maybe outperforming the S&P and the NASDAQ to the upside. From a chart perspective, I like that we reached on, I guess that would be about last Thursday, short term, start breaking some, short-term highs, right? Get above that 50. We're back above the 50-day. Now you have the 20-day curving back upwards. Looks like it might push through the 50-day. Those are all positive things. Held on to the 200-day moving average. So as much negativity as it has taken on over the last few weeks, it didn't break the 200, right? Used the 200 as support. Now it's turning back up. Now, are we risk on in the market? Me and you could scratch our heads all day and think about that. Is everybody back into the market? That's what we're talking about. But from a short-term perspective, is this price action a little positive for Bitcoin? It certainly is. We've got a big earnings this week in MSTR this week. I think that comes out later on the. I'm looking over here. It might be Tuesday afternoon, I think, over here on my sheet. So yeah, it's not my favorite area of the market. I do understand how it's become a little bit of a proxy for the market, understanding the risks of it. And let's put it this way: as a chart guy, you should be able to understand how charts work. I'm not saying you rhetorically. I'm saying, hey, I don't care what the four-letter symbol is in front of the stock chart, as long as it's making a positive stock chart from a technical perspective.
Sure.
Supposedly, that makes me a little more apt to like it. So the answer is, if you took away the term Bitcoin, do I like this chart pattern that I'm seeing right there? Yes, I do. Yes, I do. I try not to put names in front of it, if you understand what I'm saying.
I do, and I can appreciate that, because what that enables you to do, Mike, is just take an approach that maybe isn't, doesn't have bias to it, right? You're just evaluating the chart itself. And when I brought up oil here, but I brought it up for a specific reason, Mike. It looks like a test and failure at the 20-day as we speak. This is a significant development, because this is speaking to, as much as I can see it, Mike, the conversation around a lack of need for oil all of a sudden, which talks, internationally, globally, the recession fears. Does it not, or am I missing the story on this?
No, I think you're right on target right there, Kevin. Right? Forget the 20-day rejection, momentarily at 10 o'clock in the morning East Coast time today. But at the end of the day, do I understand what you're saying 100%? It's not, oil is not just a U.S.-based market, right? It's a worldwide market. So all of the actions, and again, I'm not talking politics, but all of the actions that the United States is currently taking right now is indicating, hey, the worldwide, we are the biggest economy, that we could be putting things in a slowdown. Potentially. I'm not saying we are, but potentially that could possibly be happening. And if that's the case, if there's the word that's a worldwide recession, I'm not saying that it is, if that's the case, then there's not a lot of demand for oil at higher prices right now. So it is concerning. I'll say, as a consumer, me and you I'll say we're slightly okay. It's a deflationary pricing. It's a little bit cheaper for me to fill my tank of gas. But from a worldwide perspective, I would probably be a little more concerned as an economist. Yes. Yeah,
I think it makes sense. I saw a tweet from one of our friends, Brent Moores, who was talking about this, and I admit that this is not an area of expertise for me. But Brent was commenting that generally, price of oil has come down, and yet price at the pump has not come down. And it sounds as though the reason for that is that the cost of refinement has actually increased. So while oil prices might be lowering, if the cost to actually refine it and turn it into fuel for us is higher, well, then we're just neutral, essentially, unfortunately, at the net at the pump. So, we're not getting the disinflationary result that we would ultimately like to see from a drop in the barrel price, unfortunately. So I think that bears watching. Okay, Mike, I wanted to bring some stocks in the news today, some stocks that we're going to be talking about this week, some stocks that we're going to be hearing from. One of them was Boeing. They got upgraded to outperform today at Bernstein. So let's bring Boeing into the chart. I've got a lot of lines drawn in, but most of these lines are kind of, need to be cleared. So I'm going to do that and just make note of the fact, Mike, that we might very well be back to a pretty important area up here in Boeing at this time, right?
Yeah. Hey, Kevin, appreciate it on Boeing. What I'm looking at here, as you're drawing that box, again, Boeing's, an industrial stock, giving a worldwide view of, hey, is there a lot of demand for their planes that they're making? When I saw that upgrade this morning, I hit up Boeing and I'm looking at it and I'm like, man, look at this chart. I've said the same thing when I was looking at it. You're in a resistance area. Everything that you've got there in gray, whether I want to go back to the tops, the highs at the end of February, early March, these are good problems for Boeing, because it's right now, look where we are in relation to the 200-day, which is the blue line. We're above there. We're above your 20-day. We're above your 50-day. So those were all good things.
Agreed.
That gray chart that you just did needs a little bit of an up. We need to break out of that area. So even today, with an upgrade, you're already starting to see a little bit of a red candle pulling back in. Even though the stock's up 378, it opened higher. That's why the candle is red today, right? So we're seeing a little bit of price. Now, again, half hour into the market, I'm not overly concerned. I would probably like to see a green candle there on Boeing. And if I was a Boeing bull, I might become a little more bullish. Get me above that out of your box, call it 190 right there. If I could get above 190, I think I might be a little more apt to be bullish on Boeing.
Sure.
I'd rather maybe miss these 8 points and then have the chance for a potential breakout. That's probably the way I would look at it a little bit more.
I understand that, Mike. And if you were a Boeing bull, you might be starving over the last few years, buddy. I mean, it has been a rough go for Boeing here on the weekly chart. As you can see, that overhanging resistance, that light green line there, that's the 100-week moving average. And we've been beneath it on Boeing dating back to March of last year. So you're looking at a solid 13 months there, everybody. Can't look at that overhanging umbrella of resistance as anything other than that right here. Doesn't mean we can't pop through it, but up until the point where price action does move through that, it certainly remains in a bit of a downtrend here. So heads up to that extent. We were just talking about the oil and refinement details. Valero got an upgrade from Goldman Sachs, upgrading to neutral from sell. New target here at 127, up from 115. The firm believes consensus revisions are now better reflecting the deceleration in the company's refining probability, with 2025 earnings estimates having been negatively revised by more than half, by more than 50% in the last year, meaning that in the last year, you've seen a lot of cuts to expectations on Valero. And so Goldman states that further the crude environment is improving, where OPEC is starting to add barrels into the market. According to the analysts in this research note, Goldman believing the incremental heavy barrels should support a more favorable crude differential and support margins at Valero. Now, all of that, Mike, goes counter to the price action we've seen. So if nothing else, we complain all the time about analysts not coming to the table until the price action has moved in their favor. This is at least a bit of a note that might be a little heads up for investors in Valero and maybe investors in energy over the longer haul here.
Yeah, listen, just talk about the whole energy sector as a whole. We've got a couple of big ones coming on Friday. We've got Exxon, we've got Chevron coming out. And, if you look at it over, think about all the big picture news that we've been hearing. But now if you get into the day-to-day operations of Valero or any of these big oil refineries, it probably hasn't been as bad as what we think the future might bring. And I think that, as we always joke around, I don't think we joke around, but we talk about the stock market, it's a forward-looking machine, Kevin, right? It's not looking backwards. So while everything that you just read to me might be true for their current quarter, that when they come up and report in the next couple of weeks, next couple of days, I'm not sure when Valero is reporting, but at the end of the day, after they report that, then they give this thing called a forward-looking statement. What does that mean, right? What do we see on that forward-looking statement? So I think that's what you're seeing in the downward pressure on this particular item right now, on this particular stock. If you look at it, look at the demand after Liberation Day, right? And just not the demand, but just the price action, and it just fell apart, right? So it's basing in on Valero, and I'm not saying this is happening, but it's pricing in a little bit of a worldwide recession, right? It's pricing in an oil recession right there. That's what we're pricing in. If the news is actually better and you look under the covers and I listen to that analyst report that you just gave me, there's reasons maybe to be slightly more optimistic. That's all.
Perhaps. Yeah, maybe not necessarily from the price action. The report was late last week, the 24th, and the action's been a little bit positive since. But, if you're looking for, opportunity to the upside short term, it likely means you need to take out 117 here, the level that we got back from just recently. And then you could maybe squeeze up to 124 in the short run, but that doesn't mean a shift to the trend here, everybody. As you can see, the trend is down. The trend is negative. We're below the 200-day moving average. We've been rejected at the 200-day a few times. And when you've been rejected a few times, even if you get back there, the likelihood is greater for another rejection at the 200-day moving average than it is for a breakout at the 200-day moving average. So I think that bears plenty of monitor as it relates to even a positive news development here today for Valero specifically. Okay, how about another one on the update positive front from an upgrade standpoint? And again, this one's in semis. So on semiconductor, or on holdings, pardon me, not go over here, make sure that I'm looking at the right thing so I don't speak negatively. So this is not on semi, this is on holdings. So this is our apparel company, Mike. They got upgraded today out of Citi. They were upgraded to buy from neutral with a target at $60. That's actually down from 65. They reduced estimates to reflect an unfavorable currency, weaker sales in the second half of this year, and lower gross margins due to, of all things, Mike, higher tariffs. This is part of the conversation that we're going to be hearing about a lot, I think, going forward. I think that is one of the things that we have to keep our eyes and ears on this week, because with as many big companies as we have reporting, what will their future guidance say as it relates to tariffs, and will tariffs be the key code in every conversation we hear in these conference calls?
I think you already know the answer, right? So yeah, I think listen, we both know each other very well. Yeah, listen, I think, I'd have to get under the covers on their particular where their manufacturing is. Are they avoiding, manufacturing in China? And I think that's a little bit a part of what that upgrade was about today, right? It's that they're not solely exporting from China. That's what I couldn't even get it out there, Kevin. But I think that's a positive for this particular brand. Whereas if you look at Nike or somebody like that, obviously it's been the complete opposite. Right? Mm-hmm. That's, I think, comparatively speaking to a direct competitor. If you look at Nike right now, which had a nice bounce back last week, I'll call it a little bit of a bounce, it's still in a horrible downtrend, right? These guys are very dependent on currency changes. These guys are very dependent on importing into the United States. And I think that's where tariffs are going to continue to, again, we talked about the consumer numerous times over the last couple of months.
Absolutely true, buddy. No way around it, unfortunately. Mike, the last thing that I think we wanted to get to today is talking about something that is basically in the last week been on everyone's radar, and that's the Zweig breadth thrust, Mike. Is this something you're keeping a close eye on as well? I mean, we finally got the so-called the thrust we were looking for if you were bullish last week. Is this something you've been talking about with clients and traders?
I have not as much, but hey, open it up. I'd love to have it.
Well, I thought we could add it. Listen, this is actually a study that you can add to your portfolio, everybody. If you wanted to keep an eye on the Zweig breadth thrust, we actually have the details associated with it. So I can go in here and share this actual study with you, everybody. And let's put this on the chart and just quickly talk about, what it is. It's just the significance of a move from below 40 to above 60, suggesting an inflow of investment dollars for us. And we get these infrequently, to say the least, and they can be instructive, generally on a longer term window, everybody, not to suggest immediacy, but rather longer run. Commonly, when we get a breadth thrust of this nature moving from below 40 to above positive 60 there, when we get that in short order, the thought is, or the historical data reflects that 6 months and 12 months later, we see this as a favorable development for the broad market. So it doesn't necessarily mean that we are going to get that, but there's been so much discussion about it that I just wanted to make it available and let everybody know it is an available study here. And I'm going to share that in the chat with you all once more. And I'll just remind you again that not guaranteed for its accuracy, not a recommendation for its use either, but lots of questions about the Zweig breadth thrust and its availability. So I just wanted to make sure you all saw it. You had an opportunity to add it if it's something you wanted to keep an eye on. And just as a reminder, it won't change for you as you move through your investments. This is a specific study to what we're getting from overall breadth in the broad market. So yeah, hope that's helpful for you all. Mike, let's see. We only got about another minute. Is there? I know you've always got balloons of wisdom, buddy. They're just floating around, and you're just going to grab the right one at the right time. But what do you want to leave our viewers with on this Monday, big Monday for the week on deck?
Yeah, you know what I would say, Kevin. You know, I got a million things I want to talk about. I'm going to keep my eye on the big Mag 4 of the Mag 7. I think this is a big week for earnings. I mean, my expectation is all of these guys, Apple, Amazon, Microsoft, Meta, probably they might come out with great earnings. I don't know if they're going to have good earnings for the past 3 months or not, but I am more concerned about their forward-looking statements. I truly am, and I think that that's really what's going to probably drive the market this week. What are these guys saying? Obviously, they have a little bit, I'm not saying politically aligned to the White House, but they are in touch with the White House of how the potential tariffs are affecting their business. Whether the president's listening, not listening to them, that I can't comment on. But what I would say is I want to hear what these CEOs have to say going forward about this. That's, I think, going to drive the market for, I'll say, certainly for the next couple of weeks to see what.
I think that makes a lot of sense, Mike, and I think that gives us all reasons to be listening to or reading the headlines on these reports coming all week long. So lots to get to from us on the channel all week, everybody. So thank you all for being here. Big thanks to Mike, obviously. Love having you on. I know we only get you once a month, but every time it's fantastic. So thanks for being here. Thanks to Michael Fairborn there in the chat as well. You can follow us on X. Hit the thumbs up button down below. That'll help us out in getting this to the masses today after we get it into the archive. So we appreciate that from all of you. But hope you have a great Monday, everybody. We look forward to seeing you all again real soon.